Tahli, welcome back to the podcast.
Great to be back. Thanks for having me.
It's always good to chat. Today we're talking the 5 essential questions you should ask before committing to a financial advisor. You've done a few blog posts recently explaining different sets of questions like before, during, and then after meeting with a financial advisor and working with them. So kind of a well-rounded set of questions that can guide people if they're thinking about reaching out for financial advice. So we'll cover what these questions are, why they're important to ask, in particular these 5 questions, because it's pretty overwhelming seeing a financial advisor for the first time. And if anyone has any questions, be sure to write them in. You can find a link in your podcast player. If you're on YouTube, you can just select, there's a link that says podcast questions, and you just select that, the Australian Retirement Podcast. Tahli, I thought we'd start with why it's important to ask questions.
Yeah, and it's an important starting place, obviously.
Mm-hmm.
Part of it is when people are thinking about going to see a financial advisor, a common problem is not knowing what questions to ask at all, and that being a bit of a barrier to even making that first step of booking an appointment or making a phone call. I've also had some personal experience with clients in the financial advice space who have come to me after receiving advice that was less than ideal, and kind of vetted that process with them of what could have been done earlier on in the piece to avoid ending up in a pretty dire situation. But I think when it comes to financial advice, we should treat that like hiring a personal trainer, right? Like it shouldn't be just picking someone out of the box and expecting that first person to be the best option. There's a few different areas that we need to consider, and one of them is pretty obvious. It's just making sure that that person has the experience that's relevant to you and the circumstances that you're going through. But another big important part of it that I think people skim over or don't really expect to be important in this sort of relationship is the personality fit. And making sure that the advisor that you're seeing is someone that you're, one, going to feel comfortable with, but two, also just having a good dynamic with that person. Everyone's different. Some people want to come and be told what to do, given a quick outline of what is going to put them in a better position, and then be quite passive in it. And others really want to be really engaged in the process and have more of a back and forth and some contribution to the plan that comes out at the end of the piece. And every advisor is going to have a very different approach. So getting that match is really important. And then I think the piece that we really have to touch on, because everyone that I speak to that's not in the space has this concern around advisors and the industry having a pretty bad reputation.
Yeah, it's fair to say.
Yeah. And I think, rightly so to some degree. But I think when we look at the numbers, it really is a minority that make a lot of noise for the wrong reasons. So there's some really interesting research around this. If you look at of all complaints handled by AFCA in 2024, less than 3% were tied to investments and advice. The bulk of them actually came into the banking industry, which, not too surprising.
Interesting.
And then if we go even further into it, there was only 23 firms in that same financial year that received complaints. So right now there's about 15,000 registered advisors in Australia, which is not a huge pool. But that means that there's only really less than 1% that are trying to do the wrong thing.
Yeah.
Or maybe not even trying to. Some of those complaints might be, not necessarily due to ill intent.
Yeah.
So anyway, today is really just about giving you a few tips to, one, make sure that you're ciphering out the bad eggs, but also to make sure that you're finding someone that's the right fit for you.
Yeah, I like it. So we've got these questions, and it's, like you said, it's de-risking it from a personality level, maybe in whatever other way. The first question you've got, which is one that I like all people to refer to. We have this at the very beginning of our podcasts, which is a disclaimer, and it reads, go and read the Financial Services Guide, the FSG, that's Financial Services Guide. You say, for question number 1, that should be, can you talk me through the FSG? Why is that important?
I think it's really important because, one, a lot of people receive that document but don't actually look at it.
Mm-hmm.
And two, by asking the advisor to go through it, one, you're checking that they've actually read that document themselves and they know what they've promised on paper and they fulfill that to their on their side as well.
Mm-hmm.
But you're also creating an opportunity to talk about some of the nuances that come through with an FSG. So realistically, to start off, I think we need to explain what's on that document.
Mm.
So an FSG always needs to be provided to you as a client as soon as it becomes clear that that person is going to provide some financial service. So it outlines who they are, what they do, how they're paid, and any referral partnerships that they might have in place.
Mm-hmm.
But it also has the AFSL number and the authorised rep details.
So you would be on our financial services guide, for example.
Exactly.
So I could look you up using that number.
Yeah, that's something that I really recommend people do because it's kind of like the bare minimum sanity check. If you go to Money Smart, they have an advisor register. You can copy and paste that number in and look that person up. That will have whether or not they have a valid registration, one,
Yep.
as a bare minimum. It also lists their qualifications and if they've had any disqualifications on their record.
Yep.
So that's immediate red flags, obviously, if you see anything pop up there.
Yep.
Beyond that, I also recommend looking up the AFSL.
Mm-hmm.
Sometimes you might see, and what I've seen or what the industry has seen in the past too with certain license groups is they might be tied to a number of investment firms as well. And in the worst case scenario of what we see in this industry is sometimes you might have an advice group linked to what's called a dealer group, linked to an investment management firm as well. And they're all interrelated. And it just introduces a bit of conflict of interest, really.
Yeah.
But beyond that, speaking about it with the advisor themselves, it gives them an opportunity to talk about some of those referral partnerships that they might have, because that in itself is not a red flag. It's how they manage those relationships that I think is really key. Because, having business partnerships can be really great for the client as well, because it means that you've got a really broad pool of professionals in the space who you can be referred on to for support in those niche areas that an advisor might not be the best person to deal with. Yeah,
for sure. So I think just to clarify for people, there's two different numbers. There's the, like what we call an authorized representative number. So that's the unique number, like for yourself. And then there's the AFSL, which is the actual license.
Yes, correct.
Okay, cool. And you can look both of those up. On Money Smart, you can use the authorized representative number. So for the individual, and I believe you need to go to the ASIC website. That's the Australian Securities and Investment Commission. That's where you get your license from to find the AFSL number. We can put a link in the show notes to an example of that for us if you like, so you can see what that would look like in practice. Question number 2 is ask the advisor about their personal values in whatever way that best resonates with you. Talk us through this.
I think this is, again, kind of coming back to how we started the conversation. The personality fit is so often overlooked. And, the way that this is worded too on paper, ask the advisor about their personal values in whatever way best resonates with you. That leaves it pretty broad and open, but it has to be, because every single individual is going to handle this differently. And, for some, the technical expertise might be the most important factor, and that's fine. But for others, it might be looking at things that are a little bit broader. So maybe it's asking the advisor, do they have any viewpoint on ethical investing? And what does ethical investing mean to them? Because for some clients, that's a really big piece of the puzzle. It might also be asking the advisor why they got into advice, just to kind of flesh that out and prod them a little bit deeper. And, you want to make sure that the person guiding you on this journey is the right person, and it's the sort of person that you want to be involved in your personal finances. Because one of the best parts about our job is that it is a lot deeper than just the numbers on paper. We do have to find out a lot of details about our clients' lives. So, yeah, I think it's a really vulnerable position to be in, and you want to make sure the person on the other side of the fence is going to respect that and handle that information in the best way possible.
Yeah, cool. I like it because it is an intimate thing dealing with people and their money, and you want to feel confident that the person you're dealing with maybe is similar to you in some ways. You probably don't want them to be yes men or women. Like you don't want your advisor just to agree with everything. That's like people that shop for doctors is kind of like people that shop for financial advisors is probably not a great idea, because ultimately you want an expert opinion. And even if that opinion conflicts and says, actually, that goal's not possible, or actually that tax strategy that you're operating with is not actually something you can pursue legally.
Yeah.
So a really good question to ask. Thanks for watching this episode of the Australian Retirement Podcast. I'm Owen Rask, the founder of the Rask Group and Chief Financial Officer of Rask Invest. One of the great things about retirement is you get to switch off your active income and move into a mode where you rely on passive income from your investments. This can be a daunting time for a lot of people. In fact, most people in our community will seek financial advice at this time in their lives. So if you're watching the Australian Retirement Podcast, you should know that we have resources to help you find a qualified and vetted financial advisor. To get in touch with one of our financial advisors or partner advisors, you can head to the YouTube description that's below the video and simply click the link to get taken to a page where you'll find lots of resources for finding a financial planner. We've even created a matching tool which matches you to an advisor that we think may be suitable for your stage of life, your assets, or your goals. And you can also find resources on how to verify financial planners and their qualifications. That's all available in the link in your YouTube description. Let's get back to the show. Number 3 is, who are the people you help and what are the problems you solve? I find this is a great question, and I think anyone that goes and meets with a financial advisor or their representative should ask something like this. Like maybe like, can you give us an example or something like that? But talk us through this one.
Yeah, I think this one is equally as important. It's all about understanding that different advisors will work with different segments realistically. There's a few that like to work across all areas, but most of us will prefer to specialize on one area of the market. And that allows us to be, experts in that space. So that's really important to understand, that the advisor is going to understand all the little strategies, one, that relate to your circumstances, but also they'll understand how to tackle those conversations with you, because different life stages require a different approach too. I think getting them to give it, previous case studies is a really good way of extracting that from them, because you can get a really, real life picture of what your advisor is good at handling and how they handle it.
Yeah, and it's a shame that we don't have that many financial advisors in Australia. So there are certain firms or people that deal with certain types of clients, which means that you just may have to search a little bit more. But the only way to know for sure is to ask the questions that are relevant. I think that when I've spoken to like our advice clients and being in meetings with yourself, what I see is that you can see that on full display when you have some level of understanding. Like a lot of people in the Rask community are really insightful and knowledgeable with their money. And so they do a good of research before meeting up with an advisor. But oftentimes what they read on just the ATO website or just they hear in a podcast or something like that, and they go and meet, in that meeting, you get to realize the expertise of the advisor is a different level, because it's like, yeah, that's true, but have you thought about these 4 other things that may happen before that in order to make that even better? Yeah. And that's where you see that real benefit, I think.
Yeah, exactly. And it's funny because it makes me think about when we were first starting Rask Advice, and we were looking at coming up with our Bible of all the different strategies that we could deploy, and looking at when it would be relevant, and not just, looking at the legal requirements of when you could do something and pull the trigger. It goes a lot further than that. There's so many other things that we consider before using a certain strategy that go beyond, just checking the box of, okay, your super balance is below 500K, so therefore you can use carry forward. Great. But is that really what you should be doing in this life stage? What other things can we consider? are there different priorities that should take precedence over doing this just because you can?
Yeah, exactly. Not to mention like the how-to and those types of things. Number 4 is, do you have preferred investments or fund managers and or preferred platform providers? So this is like a lot of people get spooked by these things, and probably fairly so. A lot of people have heard of those kind of old school fund managers, those old school providers of services, and they get stuck with them. Even if they leave their financial advisor, they're not thrilled with it. So I can understand where this question might come from, but what would you want potential clients of financial advisors to be listening out for in this question?
Yeah, I think this is an interesting one because having preferred providers is not a red flag again in itself. It's how those preferred providers have been selected that really matters. So you want to get a good understanding, because most advisors will do, maybe it's annually or maybe biannually, they'll sit down and have a review of their overall investment philosophy. And part of that might be looking at what platform they want to use as their preferred platform and making sure it's best in class through a variety of metrics. So that can be the costs for our clients. It can also be the overall quality of that platform. It can also be things like customer service. And a big one for us too, when we were considering that here at Rask, was if a client is working with us as an advisor, how does their access to that platform or their investments change when we're no longer advisor? Because we want people to be able to, obviously it's great if they choose to stick with us on an ongoing basis and they see the value in that. But if someone does decide that they're well informed enough to go about things indefinitely on their own, then they should be able to do that without having to see, say, all their investments sold down to cash and moved along.
There's a tax liability or something like that.
Yeah, exactly. So I think it's just understanding what those preferred platforms are, what their preferred investment approach is another big one, and whether that one makes sense to you and you can see that rationale was fair, logical and ethical. And then 2, that the investment approach aligns with what you think investing should look like, because most advice practices will have a slightly different spin on the way that they think money should be invested and what's the best approach for it. And you should be able to come to that with you should be able to arrive at that decision with your own prior knowledge, do your own research of what you think investing should look like, and also seek out a variety of different advisors to get their different approaches and then make a decision on what feels best for you.
I think you alluded to something there, which is if you're going to go and get financial advice, you can book a call. Most often the first call is free. So if they haven't answered something on their website, which we would encourage you to check out, obviously, or the FSG, which should be available on their website. I'm a big fan of every financial advisor and financial advice firm having the FSG available on the either their landing page or in the bottom at the footer, always having it available, because any client that comes from the Rask community would know to read that first, like you've alluded to. So if it's not there, then that has to be a question that's brought up in the meeting, which is inefficient for both the advisor and the client. It would be good for the client to self-assess from reading that first before going into the meeting. And so having that up front is really important. So when you're in the meeting, you can ask the right questions that are relevant. But you alluded to something, Tahli, which is that if you're going to go and meet with a financial advisor, you can meet with another one and another one and another one. Obviously, don't just keep going and going and going. Maybe pick 2 or 3. And for the first meeting, you might build some intelligence that you can take into the next meeting. Like one advisor says, I like to use this service because of X, Y, and Z, or I like ETFs more than managed funds, or I like these types of super funds more than those super funds because of this reason. You can then go into the next meeting and be like, have you considered that this, and this? And then the next advisor might be like, oh, well, I don't believe in that. I think that's wrong because of this, and this.
Yeah.
And then the third meeting, you're kind of weighing them all up together. And I think that's it's not necessarily playing them off, but it's more just you're getting smarter as you're having the conversations.
Yeah, so true. And it's, it's a free resource for you, so why not?
Yeah.
But yeah, good point too on not doing, 10 plus different meetings and getting into that analysis paralysis. try and limit it to a few.
Yeah, definitely. And it's I also like the idea of like a lot of the Rask community are interested in investing, so understanding that investment philosophy. We've got it on our website, but you may have to request something from the advisor or even just speak to them to understand how that looks in practice. Like, sure, you say that you invest this way, but what does that actually mean? Like, could you give me an example of something that's in there, but not in maybe another advisor's portfolio or something like that? Number 5 is, what will the advisor-client relationship look like? I think this is really important to understand because in some senses, some people get underwhelmed, some people get overwhelmed. A lot of people do have a just right kind of Goldilocks moment, but there's a lot of people that get underwhelmed by advice, and there's a lot of people that are overwhelmed by how intense it is. So there's like, understanding this, I feel like it's really important.
Yeah. And it's really important to understand what the ongoing arrangement involves. Certain practices, and a lot, to be honest, will do an annual review. Some will do quarterly, and it's really up to you what your preference is and your availability. Another big important part is who else is on their team, because that's a really big one. Often you will have an advisor with an associate, a paraplanner, a client services associate. There's a lot of people that play a role in building a financial plan, and dealing with one person of the team or another is not a bad thing, but you just should have an understanding of who is it that you're going to have the most contact with throughout the next 12 months or however long that relationship is, and what level of engagement will you have from the advisor themselves. Other things to consider as well is certain practices will have implementation included. Or when we say implementation, we mean basically an advisor will give you a plan. Some firms will put it all in place for you. So they'll do all the paperwork, complete all the transfers, set up all your investment accounts, and kind of just get you to sign things along the way. So some will take on the implementation and other firms might not. They might deliver the SOA and then say, on your merry way, we'll touch base with you and check in to see how you go. Others will offer both, like us. So it's just important to know, what the ongoing partnership looks like, and if it's a good fit for you. Because if you're really hands-off and you're working long days and you've just got no time to be invested in your personal finances, then you need to find someone who can just take on the bulk of the heavy lifting for you.
I was going to say you got no time to be invested in your investing. I thought that's what you were going to say. Yeah, but I kind of break it down into like 3 distinct chunks just on that. Like you've got the financial plan writ large, which is like where you supply your information, you get the modeling done and the scenarios, and then the advisor comes back to you with a financial plan. I think that is one. The next bit is the implementation stage, like putting all the things from the plan into place, which can be tedious and laborious, and hence why in ours we've got a separate kind of thing for that. Like it's all included if you want it, but you have to tell us that you want that and you don't want to DIY it. And then the third bit is what most advisors called OSA, right? Which ongoing service arrangement. And so clients, a lot of financial planning clients often get surprised that there's like sometimes 3 different fees.
Yeah.
And that can spook people because they're like, oh, I thought I was just paying for the financial plan. Because when you Google how much does a financial advisor cost, this is the thing that people get wrong, is that when you Google how much does the financial planner cost, in fact, I'll do it right now. How much does a financial advisor cost? You can see, this is the AI overview. A comprehensive financial plan will range from $4,000 to $12,000 up front. So a lot of people just be like, oh, well, that's it then. But no, I actually want the stuff that goes with the plan, and then the AI goes on. With ongoing advice fees typically ranging from 0.2% to 0.5% of the portfolio annually. So then you can be like, oh, okay, so now I can see that there's multiple dimensions to this.
Yeah.
So I would just say to most people when you're thinking about this, don't necessarily just go by what Google says, because oftentimes it's a little bit different.
Yeah.
And understanding the makeup of those things is quite important for the relationship as a whole.
I think a big part of that too is that you might often see that what's called the engagement fee or the plan preparation fee first. And sometimes that fee might be a little bit lower to accommodate for a higher ongoing fee. So just make sure you're aware of what the long-term overall cost is rather than just that, headline figure.
Yeah. Yeah. And I can say this, and we can probably say this because we're in this industry, is like, in defense of a lot of financial advice businesses, it is very expensive with all the compliance and the people involved to get a financial plan done.
Mm.
And from the client's perspective, what they see is, I just supply all this information and something happens.
Yeah.
But behind the scenes, there's so much stuff that goes into it that it's like when you get your landscaping done, all of the work's done under the surface, or the irrigation, or the pipes, or the this, or that. And what you see on top is the pretty stuff. And so it's a similar thing, and it's just making sure that all that is right. But I think that the if I may, from this question, what would the advisor-client relationship look like? I think that the kind of crux of this question is getting at what level of service can I expect from you, and what is your team going to be responsible if you're not around?
Yeah.
I think that kind of redundancy layer is really important too, because advisors have a life too. They go on leave.
Yeah, that's a really good point, actually. You want to make sure that if your advisor goes away for a summer in Europe, like, there's someone still to pick up the phone if something happens to you personally, especially if it's, a major life change. Like if you go through, for example, a separation and your advisor's away, like, you want to make sure that there's someone else there who can step up.
Yeah, definitely. And that's probably when you need your advisor the most, in those moments. Or I'm buying a house, or I'm selling a house, or my business has done this, or whatever the case may be, or I just got a redundancy, whatever.
Yeah.
So that's where it's really good to get advice. So you've done other write-ups and things on this, which we'll come back to and address. But this is 5 questions to ask before meeting with an advisor. Correct me if I'm wrong. You've done 2 others. What are they?
Yeah, the second one is 5 questions to ask when your statement of advice is being presented to you.
Okay.
And the third one is 5 questions to ask 6 months into the relationship.
Okay, so it's when the ongoing relationship is already in place. Okay, so just to recap these questions that you should ask your financial advisor before you commit to them. Number 1, can you talk me through the FSG? That's the Financial Services Guide. Bonus points if the advisor has it on their website and available to you nice and easy. Number 2 is ask the advisor about their personal values in whatever way resonates with you. Whatever the way, like, that just might be in idle chit chat, and you just try and, what are you interested in? What, do you have kids? Whatever, I don't know. Just ask general questions that make you feel more comfortable with their values. Number 3, who are the people you help and what are the problems you solve? I think the idea of case studies or even examples that you might throw at them might be just like little ones, Number 4, do you have preferred investments, fund managers, or platforms/providers? What are they? Why do they exist? How did you choose them? How often are they reviewed? All those types of things. Number 5, what will the advisor-client relationship look like? And this is where we're teasing out what can I expect from you? Let's avoid disappointment in any direction. Let's make sure we have a good understanding. So we can come back and answer any other questions you might have for us on the financial planning process. Here on the Australian Retirement Podcast, you can leave your comments below or in the little link that says ask a question, just like the Australian Retirement Podcast. There's also a link there to get financial planning advice if you do want to go down that path and try out some of these questions for yourself. Get out there in the wild and give them a go. Well, Tahli, this has been heaps of fun. I really appreciate you taking the time to do this in the studio with me.
Pleasure. Thank you for having me again.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.